Bitcoin just hit a new all-time high and it's starting to catch people's attention, but there's something much, much different today than we saw in 2017 when it's reached its previous all-time high. Now, in this video, I'm going to break down the facts and the data from the past to help us understand what to expect in the medium and the longer term. Now, whether you're, not a believer, you're just starting to pay attention right now, or even if you've been around for a few years, this is information you do not want to miss. So stay tuned. Hey, welcome back. My name is Mark, and if you're new to the channel, I like to focus on sound money. I like to talk about Federal Reserve policies. I like to talk about macroeconomic trends, and I like to focus on that so we can survive and thrive this world that's full of chaos, all right? And lately, of course, there's been plenty of things to talk about, but I started this channel just to talk about Bitcoin. And today, I want to use some historical context to help us understand where we are and where we're going. So right now, Bitcoin is on a tear. We just reached a new all-time high. I'm going to talk about that, but it's been a wild run. Now, Bitcoin has been the very best performing asset over the last 11 years, 10 years, 9 years, 8 years, 7 years, 6 years, 50 years, and this year as well. As a matter of fact, in just this year alone, 2020, we're up about 145% from January 1st. We're up about 250% from the low of this year, which was March 12th, when the entire market crashed from the pandemic. Bitcoin crashed as well. And we're up 50% in just the last 30 days alone. So it's been the best performing asset class every single year. I think actually 1 year, maybe it wasn't the best out of 11 years. And this year it has continued to do that. But even though it seems like it has been the best performing asset class and this year as well, it hasn't been all smooth. Now, I say over and over that no assets go up in a straight line and nothing actually goes down in a straight line either. So even as it's going up, it's up, down, and even when it's crashing, it's still going up, down. So there's no such thing as a straight line if you're zoomed in really close. Now, but if you zoom out, you see a little bit different. However, like I said, this year hasn't been that much of a straight line. In September, we saw a drop from 12,000 to 10,000, pretty sizable drop. Early November, we had about $1,000 drop. Of course, this is nothing compared to what we saw in the 2017 run. So 2017, if you're new and you don't know, then 2017 is where Bitcoin basically went from $1,000 to almost $20,000 in a year. And it was really just the last couple months of the year where it really started to take off. And so it seemed like it was going up. But the thing is with markets is that the faster they go up, when they reach that parabolic stage before they hit the blow off top, they start to get very volatile. And in 2017, the last couple months, as we were really taking off, we saw 20 to 30% corrections all the time. It was basically the norm. Now, in this video, I'm going to cover a couple things. First, I want to just dig into history a little bit because, as you probably know, if you've been watching my videos, you know that I believe history helps us to understand where the future. So I'm going to break down 2017 so you can understand 2020. And when I do, it's also going to help you know where we're going. All right. But first, before we dig into all that, to set the stage, I first just want to tell you how technology cycles work, all right? So if you don't understand how technology cycles work, then you really can't understand exactly what's happening. So as you can see up on the screen right now, there's a chart that kind of shows you how technology cycles work. So at first, you get the innovators. These are the inventors. These are the guys who designed it, who created it, all right? And so they're by themselves, they're in their garage, their bedroom, whatever, and they invent it, they create it. And now in order to get that off the ground, they need a little bit of capital. Okay. And this is where the first investors come in, the speculators come in. All right. After we start getting a little bit of money, we start getting traction, the development starts picking up. And then what happens is then the true believers come in. Now, these are the people that have first heard about it. These are the very first people that just, they buy into the ideology and they want to be a part of it. And so those are the true believers. Then after they get going, it gets the technology up and going. And then we get the early majority. These are the early adopters. They come in, they start using it. Then you get the late majority. And then finally, the people who just held out till the very end, they eventually come in. So it's important to understand how technology cycles work, because if you don't, you're not going to understand about Bitcoin and what I'm going to explain. So what's interesting about this chart is, like I said, first you have this inventor, and he's in his garage, he's in his home, and he invents this. And then he needs a little bit of money. So most people have heard about Silicon Valley. Silicon Valley is, of course, where most of our computer and social media have come from. So, of course, Facebook and so forth, they're all out of there, right? And so what happens there is you have venture capitalists. And so a couple guys get together, they're doing their coding, they come up with this like really cool platform, and then they get some investment, right? So that's an angel round, a seed round, a venture capital round, and that's what gets them off, all right? But that's not how this worked. That's not how Bitcoin worked, all right? So what happened with Bitcoin and cryptocurrencies in general is it redesigned it and reinvented everything. And so Bitcoin went directly to the people. And the other cryptocurrencies followed and went directly to the people. And instead of going through traditional investors like venture capitalists, like you would see in Silicon Valley, what happened is they started to do ICOs. Those were initial coin offerings, and those went directly to the people. That went to retail. So they never had to go to investors, to institutions, to billionaires, to funds to get that money. Instead, it went directly to retail. And so that's a big distinction, and just keep that in mind as I continue to break this down. All right, so now if I want to dive back into 2017 real quick to help you understand and illustrate exactly what I'm talking about, as you can see up on the chart on the screen, this basically breaks down the 2017 run. As you can see, January 1st, we were at $990 US. And it reached an all-time high of $19,869, and that was a 1,906% gain, almost a 2,000% gain if you would have held from January 1 to the all-time high. Now, of course, it didn't end the year on the all-time high. It started crashing, and by December 31st, it was down to 14,220, but still we're up about 1,300% for the year. Now, one interesting piece I want to mention is that the market cap is the total value of all the Bitcoin out there, all right, was worth $315 billion at that time. So just keep that number in mind. $315 million, that was the entire market cap of Bitcoin at that point. But as you can see on the chart on the screen, there was lots of crashes along the way. As a matter of fact, there was 7 crashes of 30% or more, as you can see illustrated up on the screen. 7 crashes of 30% more. There was way more crashes of 20%, 10%, etc. But 7 crashes of at least 30% or more, as it looked like it was going straight up in a straight line. Now, the reason why I wanted to show you that is because this time is different. Now, you might have heard that before. This time is different. I posted something on Twitter about this, saying that this time is different. Some people started to challenge me. So I said, great, let me put the data together and we'll put it together. So that's what I want to show you right now. So as I said, right, the run up in 2017 was driven by retail. It was retail FOMO, fear of missing out, FOMO. So instead of going to the institutions, to the funds, to the venture capitalists to raise the money, all the money came from retail, mom and pops, me and you, right? That's where the money came from, not venture capitalists. Now, the reason why that's important to understand is because retail investors do not behave the same way, do not have the same outlooks, don't have the same money, et cetera, as funds, as venture capitalists do. All right. So one of the biggest differences we have is that I just did a previous video how venture capitalists invest and how you can follow their same strategy. I'm going to link to it right up here, actually. So in that video, I talked about how one of the success tips was venture capitalists have a long time frame. They typically go into projects with about a 7 to 10 year time frame, a lockup period, because they know that's how long it takes for new technology to grow. So, but retail investors, they're impatient. If they lose a little bit of money today, they're out, right? If I don't make money this week, I'm out. This month, right? And so that's the biggest thing right off the bat is time frames. The other thing is that venture capitalists have a lot of money and they're willing to take that risk. They understand that if I make 10 investments, a couple are going to lose, and they know that. But the couple that win are going to win big. But retail investors, they're not cool with that. They only have $1,000. It's like my life savings. It's all the savings that I had. And if I lose 50% of my value, I'm out, right? And so it's just that mindset, the mentality, the short-term mindset that they have. We call them weak hands, all right? And so retail investors are weak hands, and that's one reason why we had so much volatility. Now, I can prove, at least I think I can prove, why that we really did have all retail in there versus what we're having today, which I'm going to explain. So it's easy to see in the Google search volume. So of course, Google, the largest search engine in the world, we can see what people are searching for, and it tells us a really, really interesting picture. So in January, when Bitcoin was just at $1,000, there was 3.3 million searches for Bitcoin. So that was the interest level. 3 million people were searching for Bitcoin at $1,000. In May, we're up to 1.5. It was just starting to gain a little bit of momentum, and we had more than doubled the search volume from 3.3 to 7.4 million. Then fast forward to August. Now, this is right when Bitcoin was really starting to catch fire. It had gone from 1.5 US dollars up to $1,000 up to 2.7 US thousand dollars. And we went from 7 million searches to 9 million searches. And in August, we ranged from 2,700 to $4,300. Keep going. In October, we went from 9 million up to 11 million searches, and the price continued to climb. We started at 4.3 and went all the way up to 6,300 in October. And then we had this huge jump. And this is where, so as the price went up, you can see the search volume notching, 3 million, 7 million, 9 million, 11 million. And then from October to November, boom, here comes retail. They're hearing about all the money that's being made. They don't want to be left out. FOMO, right? Fear of missing out. And they jumped in. We went from 11 million search to 20.4 million, doubled the search volume. And of course, the price did as well. We went from 6,000 up to $11,000 US dollars in November. And then again, more FOMO. Oh my gosh, I'm missing out. I can't be missing out. I have to jump in. And so we went from October, 11 million, November, 20 million, December, 45 million, another double. And of course, guess what happened with the price? It doubled again. We went from 11,000 up to 19.5. Now, this is all illustrated in a study done by SEMrush. I have the chart up on the screen. And what's interesting is that they found that the price and the search volume was 91% correlated. As you can see from the chart, they're moving pretty much in unison. And so as the search volume went up, the price went up. Everybody was foaming out. What the heck is this Bitcoin? They're searching and they find out, and then I got to buy, right? And so you can see that search volume. So really, really interesting. All right, now here's where things take a little bit of a turn. So that's history. Great. That's facts. That's data. But what does this tell us about the future? Well, today is much, much different than it was in 2017. So if 2017 was retail FOMO, the retail investors were fear of missing out. Today, what we're seeing right now is called institutional FOMO. So it's not the retail investors today. Today are institutions. The retail has not yet come back in. A lot of those early retailers that jumped in, those 45 million searches in December, they bought at 19,000. They got burned. They bought the top of the market. We've had a 2-year bear market, 2 years of depression, and those people for 2 years are so bummed that they bought it. They don't want to buy it. All right, so they haven't come back yet. Now, as I said, like Google Trends shows that early 2017 where the volume was, and we can see that the retail hasn't come back to Google Trends. So as you can see from the chart up on the screen right now, the search volume for Bitcoin is way down off of its peak in 2017. As a matter of fact, right now, we're about the same amount of volume that we had in May when Bitcoin was only $1,500 before it had started to catch on. So you can easily see that Bitcoin has not even caught fire, hasn't gotten the retail investors to get back in again. Now, what is interesting, I wanted to bring out a point. I said when the previous high was hit in 2017, the market cap was about 315 billion. Today, it's at 326 billion. So we've actually hit a new all-time high in Bitcoin for the market cap. The actual price per coin hasn't, and that's because the supply has increased. Now, back to the institutional FOMO. So we can already see this. Institutions are starting to FOMO in. Now, they don't really FOMO the same, but let me tell you what I mean. So, one of the easiest ways for people to buy Bitcoin, if you're an institution, especially if you have money in like 401ks, mutual funds, is not to buy Bitcoin directly, because most of them haven't been able to per the rules that they have. And so they've been buying it through Grayscale Trust, and it's an easy way to buy Bitcoin. It's kind of like buying a gold ETF. So you're not really buying the gold, but you're buying a paper gold. And so you're still getting action to the price, and they've done that. Now we have massive amount of institutional funds that have bought through Grayscale. I'm just going to rattle rattle off a couple. So ARK Investments, they have $4.4 billion of Bitcoin. We have Kinetics Trust, they have $5.3 billion of Bitcoin. We have IFP Advisors, $3.5 billion. FNY Invest, $2.9 billion. So these are multi-billion dollar companies that are in Bitcoin already. Of course, the list is super long. I'm not going to read them all to you. And those are ones that have bought through the Grayscale Trust. And so we kind of have some visibility there. Now what we're starting to see are the institutions, the hedge funds, the corporations starting to buy Bitcoin outright. And so if you've been paying attention at all, we've heard about the companies, the corporations are jumping in. One of the biggest, most notable is MicroStrategy, a $1 billion software company. They were sitting on a lot of cash, their treasury, and they decided to, instead of holding their cash in dollars, they'd put it into Bitcoin. They put about $500 million, so about $500 million into Bitcoin. Not to be outdone, Twitter owned Square, Square payment provider. They decided to put 50 million of their treasury into Bitcoin. Now we have one of the largest payment companies in the world, PayPal, have now offered Bitcoin to their 350 million users. Of course, doesn't end there. In the financial space, Fidelity, the largest investment company in the United States, they obviously are in Bitcoin as well. And then we've seen the largest investors in the world with the biggest hedge funds, Paul Tudor Jones. He's been very, very outspoken with saying that he's in Bitcoin. He wishes he would have bought more Bitcoin. And then I think in the last week or two, one of the biggest investors in the world that came over that I think, for me, seals the deal on this one. I'm talking about probably the most successful investor in the history of the world, the biggest macro investor, Stanley Druckenmiller. And Stanley Druckenmiller says he owns Bitcoin. And for me, to get someone like him in there, I mean, that just seals the deal. And then if there was any more doubt, one of the most famous investors in the world, one of the most successful hedge fund investors, Ray Dalio, about a week ago, he came out with a piece and he kind of was talking down on Bitcoin. Like, he was basically throwing around 2015-16 rumors. He hasn't really been caught up on it. But I think it was yesterday or day before, as you can see on the screen, he said, I might be missing something about Bitcoin. So even Ray Dalio has completely changed his tune. He's seen Fidelity, Paul Tudor Jones, and when he saw Stanley Druckenmiller, he said, quote, I might be missing something about Bitcoin. And yes, he is. He certainly is missing something. So the institutions are now starting to FOMO in at a faster rate. We're starting to see more and more companies every single day. The thing is, though, is that they don't really FOMO. Okay, I'm calling it institution FOMO. It's not really FOMO like the retail investors do. When they move in, when the institutions move in, they don't just, take $1,000 of their life savings and buy it. When they come in, they want to dominate the space. They're looking for sizable portions. If you guys have ever watched Shark Tank, a lot of times people come in and say, I'm going to give you 0.5% of my company. And the sharks are like, whoa, I'm not taking a small piece. If I want to come in, I'm coming in big, right? If you look at the way they do this, like look at Warren Buffett. So Warren Buffett owns $35 billion worth of Apple. 35 billion. He owns billions of dollars in multiple companies. All right. And when you're in companies like Apple, you could do that. But of course, with Bitcoin, you can't get $35 billion of it. The other thing that's different about institutions is that, as I already kind of pointed out, they have this long-term time horizon, right? Venture capitalists typically lock up their money for 7 to 10 years. Warren Buffett's owned Coca-Cola for 40, 50, maybe even 60 years at this point. So when they buy in, they're buying in for a long time, decades, right? So the Bitcoin they're buying, it's coming off the market. It's going into like deep cold storage. Like it's not coming back onto the market again. And of course, all markets are driven by supply and demand. So they're moving massive amounts of supply off the market. At the same time, we're getting increasing demand. So when these institutions come in, they have this long time perspective, they have lots of money, they understand this different, and they take it off the market, and it's not going to go back on the market. So what we should expect from that, of course, one, supply and demand, the price is going up as we can see. The other thing is that it should continue to grow bigger and less volatile. The reason why is because retail investors, they lose a little bit of money and they quickly sell, or they only bought it to make 20% and then they sell. Institutions are way different. And so we should see the volatility really start to come down. The other thing is that we still haven't seen the media start to pick it back up like they did before. And I believe we'll see media FOMO way bigger than we saw in 2017 because, of course, now we have bigger names. We have famous names that are in: Paul Tudor Jones, Stanley Druckenmiller, etc. Now, what's important to understand, again, back to these technology cycles, is that this volatility is not really a bug. Sometimes it's actually a feature. And so what I mean by that is we had this retail run-up in 2017. Weak hands came into the market. The bear market of 2018 and 2019, from the price dropping from 18,000, 19,000 down to 3,000 and staying down for a couple years, it shook out most of the weak hands. And the ones that were still hanging on, when the market crashed in March, it shook the rest of them out. Now, what that does is it gets the weak hands out and it brings in the strong hands. It brings in the institutions and the people that are going to hold from a long time. Now, as you can see from the chart that I have up on the screen, this is like a hodl wave, and it shows you the age of the Bitcoin. So it can tell how long it's been parked in a wallet without being moved. And as you can see, as the price has continued to move higher and higher and higher, the time that the Bitcoin has been locked up in storage has also continued to go up. So when the price, so you can see a couple years ago when the price was low, it was mostly all retail. The Bitcoin had been sitting around for just short periods of time. But the longer we've progressed, especially through this past bear market, now we have the long-term hodlers, the strong hands. Now, what's next? So we're in this FOMO boom, this institutional FOMO boom, and right now, and what I believe comes next is the sovereign FOMO. All right, sovereign FOMO. When I'm talking about sovereigns, I'm talking about governments. So we saw retail investors. Now we saw the institutions, the corporations, the hedge funds, et cetera, just starting to come in. We're at the beginning of that cycle. The next cycle, probably in 3 or 4 years from now, will be the sovereign FOMOs, the governments. And we're already starting to see this. Now, we haven't reached the feverish FOMO pace yet, but I did a previous video. I'm going to link to it right here, where Iran is already mining Bitcoin from a state level, already using Bitcoin for trade. Venezuela as well announced that they're going to start doing Bitcoin. So we're starting to see sovereigns start to enter it. And in 3 years from now, a couple years from now, we're going to see them starting to FOMO in. So you can go watch those videos if you want. Now, again, back to what does the future hold? Well, of course, the future's unknown. Nobody has a crystal ball. I wish I did. I say it all the time. If you find one, let me know. The future is unknown. However, there is a very easy path for Bitcoin to get to 100,000. As a matter of fact, I made a video about how Bitcoin gets to 100,000. You could watch it right here. It's a very easy path. Now, one of the big analysts in the Bitcoin space, he's known by the name Plan B. He's created something called the stock to flow model. Now, as you can see up on the screen right now, he's mapped out the price of Bitcoin based off of the stock, which is the amount of Bitcoin supply that we have, and then the flow, which is the new incoming Bitcoin. That's the inflation rate. And based off of this, when you map it back to gold and other scarce assets, you can see that the price continues to move up as Bitcoin continues to get more scarce. All right, so as you can see on the screen, the next cycle after the halving, which we're entering right now, should take us to about $100,000 per Bitcoin. Again, in that other video, I showed you a bunch of reasons why Bitcoin can easily get to 100,000 without having to use the stock to flow model. The stock to flow model is another method. Now, that would put Bitcoin at $100,000 in the next 4 years or so, which is about a 5x return from here. Now, of course, the future is not guaranteed. Nothing is, but the way we are going is certainly looking like that is going to be the reality. Now, of course, like I said, nobody knows the future, but each time, the further we go along, the less risk there is. Every time it doesn't die, the stronger it gets. Seeing more people come in, more financial institutions come in. Now we have the first senator who's openly speaking about Bitcoin and trying to usher in. Now the government, actual people working, politicians working for the government are now actively trying to usher Bitcoin in. And so there's just less and less and less risk all along the way. Now, the big question I'm going to finish up with here is that, should you buy now or should you wait? And that's probably a question. I've been getting bombarded with that question. I'm sure lots of other people have as well. If you've been in Bitcoin for a while, your phone's probably been blowing up as well. And so that's a great question. Should you buy now or wait? Now, I did a video just recently talking about the exact same thing. You can watch it right here to understand if you should buy now or wait. A lot of it depends on what your long-term perspective is, what your convictions are. If you think that Bitcoin can easily get to $100,000, then buy it. Even if it dips a little bit to 12,000, so what? It's going to go back higher, right? If you're unsure about that, then maybe you want to start averaging in. Again, go back and watch that video if you want the full answer to that. And otherwise, give me a thumbs up on this video if you like it. If you like seeing Bitcoin hit the moon, give me a thumbs up on this video. If you don't like the video for some reason, give me a thumbs down. But either way, leave me a comment and let me know why. I try to answer all the comments, as many of them I can, and that's what I got for you today. All right, to your success. I'm out.